Now, it's not often that stories about taxes make the headlines in sub-Saharan Africa, but over the last 2 years, we've seen a lot more stories about things like tax avoidance have been gaining quite a lot of traction. In Kenya, for example, a double taxation treaty with Mauritius is actually being challenged in court by the Tax Justice Network. It's a non-governmental organization, and that's gotten a lot of traction in the media. Earlier on, I spoke to Christoph Evard. He's a partner at Kibo Capital. I started our conversation by asking him if this campaign to end treaty shopping and entirely legal tax avoidance is a threat to the explosion in private equity funds in Africa.
What we're seeing is that regulators are becoming more sophisticated. The new regulations that come out are much better suited for the current environment, and we welcome that. I think we as a private equity investor and other investors, we like transparency, we like maturing markets, and as for example double taxation agreements are becoming more and more, and we are able to do better tax planning. That is helpful for everybody. So it levels the playing field, and I think the more transparent the market is, the better we can work with it. Taxes are a fact of life, and we are happy to play our part in this. And the better we can manage it, we can plan for it. Well, all the better.
Has it ever been an issue in any of the investments that you've made? Have government officials ever had to come to you and say, look, Christoph, I know you're based in Mauritius and probably we have a double taxation agreement, but we're not particularly comfortable with the fact that when you do exit eventually, regardless of the jobs you've created here, the taxes that the companies you've invested in will pay here, those capital gains may not necessarily end up in our coffers?
We never had this discussion in any of our investments, and indeed I believe that the regulator needs to look at the markets and needs to look at how it best tries to capture value add that is created within the countries. I think it's important what you mentioned, that all of our companies are paying their taxes in their country of operation. So I think the government is benefiting significantly from jobs, from the tax payment from the company, from the technology know-how that we're bringing in, from the developmental standards that we're bringing in, because don't forget that the development finance institutions are backing, well, almost every single private equity fund out there, and the standards for both environmental and social development, the IFC performance standards, etc., they are being implemented throughout, and I think this has really reached a tipping point. So I think the governments and the regulators are well aware that they're benefiting significantly from that.
And there will be plenty more conversations on that particular topic at the Wharton Conference later on in March.